What is up? A little trade recap for today. Guys, took two losses. Missed out on a 1 to 12 RR right off the bat in the morning, but I took two losses. Not really worried about it, but we're going to go over these and actually get an idea of what price was doing. So yeah, let's get into it. This might be somewhat of a long video, and then I'm going to the gym. So we go in the 4-hour chart. I'm doing a market replay. Right now, what we see on ES is we have this 4-hour fair value gap right into here. We have a 4-hour, I believe it was. Maybe it was down here. I don't remember where ES pushed. Hold up. Way. My hands in the air. We're going to play this through. All right. Let's go all the way to 8:10 a.m. That's on me. We're going to get rid of a lot of shit on here. But ideally, we're at all-time highs. We have 4-hour fair value gaps right here. We have a high right above that, high up here on ES and Q. We had, I believe, a 4-hour fair value gap right here, which we are now way past that point, tapped into these highs. We have these highs up here, and we're at all-time highs, probably this next week. I mean, we're already there, basically. So ideally, that's just something to note. What do I see right down here is we have a 4-hour fair value gap. All right. And on ES also has a 4-hour fair value gap. Just something to note right here. I believe we had a 4-hour or something earlier. Damn, why am my shit being like that? Well, we're going to go to 7:45 a.m. We have this 1 hour. Maybe it was a 1-hour fair value gap. I believe it was a 1 hour. But we're going to play this out into market open. All right. What do we see so far right here that I have marked up? This is market open. I got on the charts early. We have a 5-minute fair value gap up here. We have, I believe, a 2-minute fair value gap right here. We have another 5-minute fair value gap right here. We get in the market open. Boom, market opens. What does the market do right away? Well, on Q, what you'll notice is NQ swept out a 1-hour low. ES tapped into this 1-hour low. So on the 1-hour time frame, we closed bullish. On a 1-hour time frame, we are bullish. Look at this rejection. We swept sell side liquidity. So now that gives us the idea of, okay, we should be looking for a reversal. Also, we're all-time highs, so it's obviously we're trying to look for longs. What do I see right after that is I get a 5-minute inverse fair value gap. That's my confirmation confluence. We go to the 2-minute time frame. We have that's after we inverse this 5-minute right here that we had. We had a 2-minute continuation confluence. There off the bat, that's 3 confluences. That is showing bullish order flow. Now we're waiting for an inverse to get our confirmation confluence, and we got a 2-minute inverse. So let's say if I entered on this 2-minute inverse, which we'll get rid of this real quick. If I entered on that 2-minute inverse, we'll just do this. All right, 2-minute inverse. I end up entering in right here. Let's just say inverse there. Put the stops to, I could put them all the way down here, but I ideally put them here or at this, probably a little lower. Because what would invalidate this trade is if it now comes back in right through and rips through this candle. That would invalidate the trade. So short stops. So what I would have done is de-risked a lot. Yes, we have, I believe, 4 confluences. Hold on, my shit's lagging. We have 4 confluences, 100%, but added into that, all those 4 confluences, tight stops. Well, what does price do? I would have targeted then, would have gone to the 15-minute chart, the 30-minute chart, targeted, say I entered in right there. Entered in right there. I target this high, I target this fair value gap, I target up here, or I target all the way up to this high. This is on ES, this play would have been. And as you can tell, this trade, hold on, this would have played out. Targeting this fair value gaps, maybe inverses this one to go tap into this one, would have been a really big trade. Even if I wanted to be more conservative with my stops and move them down lower, maybe find like There really is no other fair value gap. We could targeted this fair value gap. It's still a 1 to 5. It's still a 1 to 5. So I feel like the safe option on this trade would have been like, all right, target, put stops down at this fair value gap. If it inverses this, it might just want to inverse this to go and tap into this again and then go higher. So ideally, I feel like the safe stops would have been there, which I'll go over again in a little bit on why it's important to notice stops, because I ended up taking a loss on that today. But either way, this setup had 4 confluences. It followed my trading plan. It followed my trading rules. So I think it is a good setup, either win or lose. I could have entered here, put stops here, and it could have came down, inverse this fair value gap right here, or just rip right back through this fair value gap to go and fill here. But that's where my stop should have been. Should have done light risk, even $100. And that would have been a 1 to 5. Or 1 to 2. Target this 1 to 2. Like, yeah, that just would have been a really nice setup, correct? Correct. That is the A+. That is like the best setup you would have gotten today, I think. That's a beautiful setup. I think TJR might have taken this setup. I don't recall. But we're going to go back into what I was saying. And we're going to be on ES and NQ for a little bit. So as you can see, market's pushing higher. We have this 2 minute here. So as of right now, we've had a liquidity sweep on the sell side on NQ. ES tapped into a 4 hour and it was pushing out of it, rejecting out of it. We got a 5 minute inverse for value gap. And we ended up getting a 2 minute retrace and a 2 minute inverse for value gap. So we have 4 confluences there. I did not get in there though. We had news at 9 o'clock. So that's just one thing I was noticing as well. But as we're trending higher, we go to the 5 minute time frame. We had this fair value gap, this bearish fair value gap that got inverse, which is disrespecting bearish order flow. We are currently bullish, very bullish. Like, look at this. If I would have entered in that trade up around here, bro, oh my gosh, and it just rips higher and higher. But we have a 5 minute fair value gap right here, bearish fair value gap that gets inversed. We're having more and more 5 minute fair value gaps. Let's go to NQ because I ended up taking the trades on NQ, I believe. Don't know where they are, but something to note. So we had a 5 minute fair value gap right here. We had a 5 minute fair value gap right here. And we've already had, like I said, the liquidity sweep, 5 minute inverse, 5 minute inverse right there. Ooh, NQ, I don't think ever gave us a fill. No. And maybe that's something I fucked up too. But either way, 5 minute inverse, created this right around here. This rips up past this side of the candle, this bearish candle. Disrespects it. Create a 5 minute right here that we're tapping into a couple times. Which then we end up going through there to tap into this. So that gives me, I'm like, okay, we're showing strong bullish order flow now because it just went through here. Didn't inverse this candle, but it just went through there to tap into this and then push higher. So what I ended up looking for at that point then was this right here. We had a 2 minute inverse. And this is where I took my first trade. If I recall, I got in right here, ideally, and I put my stops like right here. Now, and I was targeting these highs up here. I believe that was the first trade, ideally, because we had that retrace into there, that fair value gap, and I didn't want it to retrace back out. So one thing I talked about earlier on ES with the one play that what I was talking about is if you were to enter up here, instead of putting your stops right here, you want to put it to this fair value gap, because if it inverses this fair value gap, it's disrespecting bearish order flow, bullish order flow. So one thing that, and instead I was thinking, okay, I put my stops here. No, you want to put your stops here. You want to think of what is the smartest place to put my stops. Like, you have to have a story, because if price comes down, I got to think of it like this. This is a bearish inverse for value gap. So I'm not going to put my stops right below that. What I want to see price do is, because it could come down here, just rip through it, inverse it, and then push a little higher, or fill it and then push higher. Safe to say price did not do that. But on NQ, like I said, the trade that I took today possibly could have been a winner. I'm questioning myself. Actually, no, to note with this, the RR wouldn't have been great on that inverse. So I put it down to this fair value gap. That's like a 1 to 1.88. That's not good at all. So that is a reason why you shouldn't take the trade. See, I had my confluences, all of my confluences set up. So what I thought it was a good setup. I still de-risked, but you gotta question yourself. Like, okay, well, where's a reasonable place? As the same way as like, where's a reasonable place to put stop? I mean, take profits at 15-minute highs, 15-minute imbalances, 1 hour highs, 1 hour imbalances. Those are good places to put your stop, take profits. Then you also have to think, what are good places to put my stops? You want to go to the 1 minute and 5 minute time frames and put your stops and adjust them on like confluences you entered off of. And mainly, you want to be conservative with it. Okay, what's a smart stop? You don't need super tight stops, but what's a smart stop? Or if price returns all the way to this point, it would invalidate the setup. And if I would have taken this trade and I would have marked this up actually before I hopped in and I put my stops down here, which is where my stops should have been if I did take the trade. I should have known right away, okay, this is a shitty RR. I should not have taken this trade. And I've realized that in hindsight now. And as you can see, what price does after this point is completely take it out. Either way, it was not a good setup. It's a 1 to 1. That is not a good setup. And my stops originally were right around here. Not a good setup. Even target these highs, the 15-minute high, go to the 15-minute time frame, which you'll see I have something to say about in a little bit. It's a 1 to 4. So, but ideally, that's not the setup you would have marked up if you're a profitable trader. Ideally, you would have put your stops all the way down to here, and you've been like, oh shit, this is a really shit trade. I'm not taking this. Like, this would be a stupid ass trade to take. So yeah, that was the first loss of that. The first loss of the day. And it was a shit setup. So that's something to note too, is like I said, in the same way as you mark out your take profits of where you might take, money out of the position, you need to mark up like, okay, what is the smartest stop here? What's a conservative stop? Before you even think about entering the trade. Put up your long position or short position, mark that thing up, and then, all right, TP, we can target 15-minute highs. Here we can target this. Not a good setup. Not a good setup at all. You have to be realistic with yourself. So after we see that, we can get rid of this. But one thing to notice, because I took the other trade on NQ, I believe, again. Yeah, I did. We come back down to retrace into this. Another thing, too, with taking that setup on the 2-minute time frame where I got that 2-minute inverse, who's to say that price, once inverse is here, it doesn't want to come back down and fill in orders more? Like, this barely filled orders. It tapped into it and respected it, rejected out. Why would price? You got to be careful. Like, could price want to come down and fill more orders? And look what price does. It comes down. If I would have entered here, it comes down, fills more orders. So what do we see after that? On the other trade that I took, well, we have a 5-minute fair value gap right here. To note, price starts coming up. It's respecting this fair value gap, bouncing in between this thing. I believe on this candle, yeah, we had another 5-minute fair value gap. So what do we notice now? We had an inverse. So we came back down, we filled in more orders within this fair value gap, but we filled in more orders within this fair value gap after the first loss. So what I'm thinking is, okay, we're filling orders within here. Now I want to see price do is come up and inverse and then retrace down, or just come up in inverse. Well, what do I see here? Price comes up and inverses this fair value gap that I have right here. It inverses it with this candle at 10:22 a.m. Just note that. And then what does price do? Gives us a little retracement on this for now I'm looking at. Yeah, this is where I entered in. So I'm on a 2-minute chart. We have a 2-minute fair value gap. Price came up, inverse this 2-minute fair value gap after we filled in more orders here. I waited for a retrace. We get that retrace. It taps into this fair value gap, the 2-minute, immediately rejects out. So what I was looking for on the buys was, let me go to the 1-minute chart, because I think I entered on a 1-minute inverse. No, I did not. I believe I entered in. Let me look at my phone. Okay, yeah, I entered in right here. I entered in right on this trade. My stops were below this fair value gap because if price comes through and inverses this fair value gap, it's a loss. But this trade followed my trading plan because, like I said, we are showing bullish momentum. We filled in more orders. We pushed lower to fill in more orders to then come higher, inverse this 2-minute fair value gap to retrace into this 2-minute. And we ended up getting an inverse. No, we never inversed. We created another. But this is something to note as well because I had a stop loss issue today. We're setting correct stops, and I also had a take profit issue. So ideally, what I could have targeted was, I think I got in right around here. It was on this right, yeah, it was literally like right there. Stops right here, because like I said, if price now wants to, let's say, push up and then come down, and price rips through this, I'm assuming it's going to want to take out lows down here or inverse this fair value gap finally to go lower. So the correct place for stops today on this second trade was right here. That's a good place to have your stops. It's a kind of a big trade, big position, but that's why I de-risked, and I already took a loss today. So ideally, when I enter a trade, one thing I look for is where to set my take profits, and we talked about that earlier. What do we have? What do we mark our take profits with? Well, we want to put take profits at points where market is going to potentially make a reversal. So that it would be at highs and lows and imbalances. So as we can see right here, before we're even at this point, let's just think, right at this point, let's just say we're right at this point on the chart. Should lagging. We have, what makes a high? An up candle and down candle. We have a 15-minute high up here. 15-minute high right there. That's where my initial take profit was on this trade for a 1 to 2.8 or 1 to 2.88. So that would have been a good setup. What I could have done was, because we have a high and a low, and we have another high and another low. So what it was, the first take profit should have been this. This should have been the initial take profit, which would have been a 1 to 2. A 1 to 2 RR is not bad. That is not bad at all. That's a profitable trade. That's a winning trade. It's better than a 1 to 1. So it's a 1 to 2. And if I would have taken that 1 to 2, let's just go to this. I'm hoping my chart's not so messy. It's been very messy lately. But we can just go back to this point that I entered on. All right, we had that 2-minute fair value gap. Let's just go through this. A 2-minute fair value gap that got retraced into again. And this is after we got all our other confluences. And then I immediately entered right after that, after we got this inverse on top of that. So it retraced in, and then we got the inverse and it retraced in, and then we're pushing higher. So I entered in. And I should have been targeting these 15-minute highs up here. That's one of the 15-minute highs I had, but I targeted this 15-minute high. And I never had a take profit right here. And this is where I targeted. I'm going to watch this play out. Just want you to get an idea of this, because I'm going to go through something too on this trade. Market's pushing up, right? This trade is looking pretty fucking good. But yeah, I wasn't playing to the best. Alright, so one thing to note. Trades moving on. What do we see? A 5-minute fair value gap get created. What does price like to do before it tends to push? Let's say we're going for highs right now. What does price like to do before it pushes higher? It likes to fill in imbalances. This is an imbalance. It might want to. So I was thinking, okay, we like those because when you're in a winning trade, you like to see imbalances like this sometimes because it tells you, okay, it gives you an idea of where I can put my stops. So originally my stops right here. As soon as this imbalance got created, I've moved my stops right to here because it could fill in this imbalance to then push higher, or it could inverse this imbalance and then push lower, which you're going to see actually what happens. Another thing to note, look at where my first take profit should have been. Look at my first take profit should have been here, 1 to 2, I'm out of the trade. Or I leave a runner. My take profit though was left up to here because I was chasing a better RR. Not much of a better RR, but I was. And that's something you have to be in tune with in yourself is, if you're going to set your take profits at certain places or your stop losses, you don't want to be setting them with an emotional aspect where it's like, oh, I want to see this point get hit. It's more money, it's a bigger trade, it's a better looking trade, it's sexier looking. You want to be able to have a story behind it. So when it comes to take profits, like I said, okay, well, if I am entering a trade, where would I want to set my take profits? If let's say it's a buying position, You want to set it at 50-minute highs, 15-minute imbalances, 30-minute highs, 30-minute imbalances, and even target 1 hour highs and 1 hour imbalances, and then 4 hour and 4 hour imbalances, right? And then it's the same for lows. If you're taking a trade on lows, you want to see your take profits at like 15-minute lows, 30-minute lows, and then it's imbalances as well on those time frames and even higher, right? You want to look at higher time frame highs and lows because this is where my price wants to make reversals. It tends to make reversals off of sweeps. So we end up getting the 15-minute sweep on this candle right up here, which, hindsight is a bitch looking at this trade. But what do we see after price does that? Oh, look at that. After price takes out this high, pushes a little higher, doesn't take out this one. That's the highest point that we had marked up here. It doesn't take out that one. It starts making a reversal because it already swept the liquidity it wanted to sweep. And that's why it's smart to be conservative and be like, okay. And I looked at this too initially when I took the trade, I was like, well, I should target. I literally remember looking at it. Well, I should target this one, but this one looks better. I'd rather target this one as more money. I don't want to get out early. Dude, be conservative. This is what I'm saying too, you have to be smart in the markets where it's like take your wins. If you have a winning trade, take your profit, take the wins. And what do we see price do after that? Price starts pushing lower. And it fills in this imbalance. So I was thinking, it might fill in this imbalance to go then take out that 50-minute high. I was having hopes and aspirations, right? Stops, like I said, I moved all the way up to, the stops were originally right around here. I moved my stops up to here. And if it inverses this, I'm out of the trade, I lose. You're going to see what price does here. We're just going to watch this play. Oh, isn't that nice? Isn't that nice? I forgot it was that quick. Price inverses the 5-minute. Stops me out right around here for break even on the trade. And now we're at this point where my original stops, how beautiful is that, would have just been taken out. And why we move them up is because, all right, if price inverses this 5-minute, it's most likely looking to go shorter and target some. We can go to the 15-minute time frame now. Maybe target, so we have up candle, down candle, up candle, down candle, up candle. Either targeting imbalances between here. Like I said, it's probably going to, we have a 15-minute imbalance right here. Might go in inverses 15-minute imbalance or fill it and then go higher. And then maybe target lows down here, right? It's just something to know. But I'm hoping if you're watching this, you're having a good idea and understanding of what I did wrong on the charts today and just take notes on that. I'm going to take notes for sure. But I gotta leave for the gym soon, so I'm probably gonna cut this in a minute here. But yeah, like I said, so first setup today. I mean, could keep going back and watching this video. I had 4 confluences that I could have taken off of, and then it's also making sure the stops are in the right place. One thing I'm gonna be honest with myself about is making sure it's stuck in my head is when I start taking trades now. Not only do I have to have precise points and take profits and conservative points and take profits, not aggressive. This is aggressive, targeting the highest of the highs. Target the middle ground. If there's 15-minute highs before then, target those for TPs. And this would have been a win. I would have ended up on 1 win, 1 loss today. But my ass targeted, and I was aggressive, and I targeted the highest of the highs. When there was other highs before then, that price could have made a reversal off of. Hindsight is a bitch. That makes me want to bite my tongue. And what does price do now? It starts trending lower. So like I said, the first trade I had a setup in, which was on the 2-minute time frame, was I believe right on this candle. Stops were originally right here, which I thought was a good trade. Target these highs 1 to 5 or some shit RR. But ideally, stops were in a bad place because we already had a fair value gap down here. Ideally, to play smart and conservative, price might want to come back down and fill in orders within this imbalance before it continues higher. So in hindsight now, I'm understanding it, but like next time you see this on the chart, like let's say you're looking for lawns, for an example, let's say you're looking for lawns. We'll get rid of this actually right now. Say you're looking for lawns, okay. I'm about to get into the lawn, but we had this inverse right here. We inverse this bearish fair value gap for my last final confirmation confluence. Well, let's see what we end up getting out of that inverse. All right, well, stops, let's say we target 15, we target this high up here. or we target this high up here, right? And then originally you'd be like, okay, well, where do I want to put my stops? Well, we already tapped into this fair value gap, but rejected out of it. But to be smart and conservative, price before it wants to take out all these highs, which it ended up doing, it might want to come in and fill more orders within this fair value gap and then continue higher. And then you put it like to this fair value gap or even lower, and you'd be like, oh shit, this is a really shit RR, not a good trade to take. Doesn't follow my trading plan, right? You want to have a set in stone, like what are you willing to risk today? What is the RR you're looking for? 1 to 2, 1 to 3, 1 to 4. And then take the most conservative out of the two, and also being conservative with where you set your take profits and where you set your stop losses and being smart with them and precise. That's such a big proponent of this. But as you can see, like I said, price might want to come and fill in this imbalance before it continues higher. What does price do? A little seek and destroy action. Fills in, sweeps out these lows, fills in this imbalance, and then continues higher to then go take out this high. And now it's ranging. So yeah, that literally is the setup for today. Ideally, the best setup would have been around here. It would have been, I believe it was NQ or ES. But just go back and watch the beginning of the video. That was the best setup set in stone today. And this setup was also not bad. This was the setup I got my last setup I took on a loss. I don't think it was a bad setup. It followed my trading plan. And the stops were put in the right place. And actually, it wasn't a bad setup at all. It was a 1 to 2. It's just my only issue was me being stupid and making mistakes, which I need to learn from. That's what market experience is. It's noticing, okay, be more conservative with your take profits and be more conservative with your stop losses. I'm going to say this one last time and then I'm done. Just for me to get it in my head for the rest of the day and hopefully fucking the rest of the week. If you're looking for longs or shorts, no matter what, target the nearest 15-minute highs and the nearest 15-minute fair value gaps. And then target the nearest 30-minute highs, the nearest 30-minute fair value gaps. Don't just fucking target the top ones and say, that's my take profit. That's where that will be. No, target the nearest ones, and that could be your first take profit. Maybe leave runners. We'll see what price can do. But if your risk reward at that first take profit is anything less than the 1 to 2, do not take it. And that's also with your stop losses, where I have notes on this somewhere. If you're going to be entering the trade, and you are having your stop loss set, you want to use the 5 to the 1 minute time frame to put where your stop loss should be. And you have to rationalize with yourself, okay, well, what might price do? It might inverse it. It might come down past this point. Let's put like I said, just to get an example, if you're a visionary, I enter right here, I'm being really fucking stupid. I enter right here. Oh my Lord. If I enter right here, okay, I got to be realistic with myself. What might price want to do? It might want to fill in imbalances. Even if it comes past this point, it doesn't matter. It could come all the way down to then go higher, or inverse this and then go lower. And that's what I should have waited for. I should not have taken this trade at all today because it was a really shit RR to think about, and I know where I should have put my stop loss. Hopefully I fucking learned from that. And originally on this second trade, which was right around here, put the stops below this fair value gap, target up to these 15-minute highs, because it's the nearest 15-minute highs that we had. That's where I should have put my take profit, and it would have gone hit. This is a great setup. This is a great setup right here. Great setup. Follow the trading rules. Yeah, I have my take profit set out, and it hit this high. I marked out this high for a reason, because I knew it was most likely it had a potential of getting hit. That should have been a take profit then, and the stops were put in the correct place. And then this fair value gap getting placed in here on the 5 minute, I knew, I'm like, it could fill in orders here to then go higher and take out this high, or it could inverse this to then go lower. And what does it do? It inverses it to then completely stop me out. That's the setup. So 2 trades taken today. 1 trade missed, and 1 really shit trade that was just, like I said, a complete personal error. It was just a terrible risk management. It had nothing to do with the strategy. It was just bad risk management. And the second trade had nothing to do with strategy. It was just my own personal error. And that's hard. It's the name of the game, but it's like, you're not perfect. You're not going to be perfect at trading the market. You're going to make mistakes, but that's important to fucking learn from them. So I've repeated myself a lot in this video. Good. Get it in your head, understand it in the same way I need to understand it and get it in my head. Through repetition, you become a master. It's the name of the game. It's the way this shit works. But yeah, let me see one last thing, and then I'll shut the fuck up. Finally, I know. Give me a second. So one thing I want to say too, last, is when you are entering trades like that, the first trade I ended up taking, and my stop loss was put in a shitty place. You gotta sometimes ask yourself, are there also positions, right? Hold on. We have positions like this one today where the stop was fucked up. The stop should have been down here, and I would have known it was a bad risk to reward. But we have some trades where we are in a position to want to snug stop losses, or we are in a position to just let trades go if they are not there, right? So one thing I told myself too is if I was being realistic with this, I should have been like, okay, it could come down to here, so a smart place for stops would be here. Mark it up. Mark this shit up. Stops here, and then I'd be like, oh shit, this is not a good trade. I should not take this trade. All right, follow my trading plan. It's not a good risk to reward. It would be smart stops. This would be a smart stop to put because price could want to push down into here. It is a point where price might retrace into, and it did. But it's not a good risk to reward. So don't trade to setup. We'll wait to live it. We'll wait to trade another day. Live to trade another day. And then later on, I got a setup here that I fucked up on. But yeah, that's really it. Learn from my shit. Don't make the same mistakes as me and get better.